Welcome. My name is Len Lane, and I am the founder and president of Brokers for Life, Inc., and we are Dominion Lending Centers in Western Canada. The topic of our podcast will be about what we consider to be real-life mortgage solutions. Welcome back. This is podcast number 2 in a series talking about insurance. Yes, I know it's that topic that none of us ever want to talk about, but we also have an insurance program called Mortgage Default Insurance, which pretty much covers anybody who doesn't have 20% down. We're going to talk about how that works for everybody and why it works. And today our guest speaker is Teresa Ferbey, Sagen Account Manager for Edmonton and area. Long time in the insurance industry, or that side of the insurance industry anyway. So having worked for Genworth in the past as well. Teresa, welcome.
It's so good to be with you here today. Thank you for inviting me.
No problem. So title insurance. You know, when people buy homes, they realize that there's so many different types of insurance. Whether it's title insurance, life and disability insurance, and of course home insurance. But the other one that's pretty much predominant in mortgages is that in the real world, the majority of Canadians have less than 20% down to buy a property. What role does mortgage default insurance play in making home insurance possible?
Like you said, it is the reality for most when purchasing a home, whether it be their first or second home. It can be challenging to come up with that 20% down payment that is typically required or has been in the past. The government allows us, one of 3 insurers, to protect the lender, take on that risk so that the borrowers can put less than 20% down and pay a premium to us to do so. And it allows them to get into a home with less than that 20% down.
Super important. I know the first-time buyer is probably one of your biggest programs. But what are some of the other more popular programs and why do you think they are?
We have a great New to Canada program. That is probably one that has taken up a lot of popularity lately. The reason that it has is because we in Canada have allowed a lot of people to immigrate. So newcomers coming to Canada, we are expecting 500,000 this year, 500,000 next year. So there's a lot of people coming to this country and find really quickly that they want to make this their home. And so our New to Canada program is awesome. We actually have a few recent changes as of last week that make this program really easy for first-time New to Canada borrowers to purchase with less than that 20% down, as little as 5% down, with very little requirement in order to qualify them. So it's wonderful.
A well-used program, I'm sure. And like you said, we've had millions of new Canadians over the last few years, and I'm thinking that may continue into the future as well as we continue to have an aging population, myself included, as we need to replace people in the industries, right? So what else is, I know you do a great job with self-employed clients as well. What are some of the details of that program?
Absolutely. Yes, we do have a business for self program. So for those that have their own business and they want to purchase, oftentimes they have great accountants and they declare a lot less income than they actually truly bring in. So knowing some of those details, what their gross business revenue is and what they actually bring in and that shows that they've paid their income tax to our lovely government. All those things are part of it. They put 10% down. They pay a little higher premium than your typical first-time home buyer, but they're allowed to buy their primary home with 10% down. And we call it our stated or Alt-A Business for Self program. So that absolutely is another popular program. We have heard that 1 in 4 Canadians actually do have some sort of business for self component. So it's a great program.
Yeah, it's not uncommon, and a lot of new Canadians also seem to want to work for themselves. We have a lot of Ukrainian clients in our book of business because of Tatiana, but they they are all tradesmen in most cases, and they're the ones that want to come and start their own company and start off fresh in a new world, right? So
Yeah, there are a little bit of limitations though. If they're new to the country and want to be business for self, we want to see them get a little established before we can consider them and have their permanent residency established as well. But yeah, those are two great programs. We also have another one that has gained a lot of popularity is our Purchase Plus Improvements program that sometimes goes nicely with our energy efficiency program. And the Purchase Plus Improvement program allows people to purchase their perhaps dream home, their home that at face value maybe has some limitations or they want to make some improvements and add that to the mortgage when they purchase and make it their dream home. So the Purchase Plus Improvements program has become very popular. Most people think that if they want to do improvements to their home after they purchase, they can just refinance and add those improvements back into their home. But many people don't realize that the government has taken away that refinance ability from the default mortgage insurers at this time. So they need to wait until they have enough equity built up in their home to do that. So really making those improvements at the time of purchase is most ideal. And so it has gained a lot of popularity in the last little bit as well.
that program was pretty much limited to $40,000 for many years. We have several lenders that are now saying that they can go to $100,000, which I kind of consider that to almost be construction at that point. But so how is that working? We've been told that some will allow us to do draws on that $100,000 if the project is big enough.
Yeah, actually, our program allows people, we don't necessarily have a minimum and we don't necessarily have a maximum amount. However, it needs to make sense. So our Purchase Plus Improvement program, if the improvement is 20% of the purchase price, 10% of the purchase price or greater, you can do up to 4 draws on that improvement amount. If it's less than 10% of the purchase price, then it is a one advance. But whether it be $20,000, building a deck and a fence, that could be something that would be maybe $20,000, maybe doing a small improvement to the home, fixing up the kitchen or bathroom. Maybe that might be a little bit more pricey. Maybe that's $40,000. And perhaps it's finishing the basement of a home that has an undeveloped basement. Maybe it's building a garage. So there can be several things that you can do to a home that can all be part of it. And again, if it is 10% of the purchase price or greater, then we allow up to 4 draws. So there are some limitations with some different lenders that will control what that limit is. But we at Sagen actually don't necessarily have a minimum or a max.
That's good to know. We see that a lot for basement development, and these days that's about $40,000 if you put in a bathroom down there. Not hard to go over $40,000, I'm sure, if you need to do roof and build a garage or something like that. So that's I actually added that into my construction podcast that I did a couple of weeks ago. That Purchase Plus Improvement, when you get into that scale of work, it really falls more into construction. And talked about how the draws are a great improvement to that program, because not everybody has the $100,000 to go ahead and do all the work and wait to get paid, right? So
absolutely, yeah. So it is great. Another one, just as far as popularity, would probably be our vacation or second home program. Which allows people to buy that vacation property or buy a second residence in another city. Perhaps one spouse or partner works in one city and one works in the other, and they have a home base in one of those cities and they need another residence in the other one. And so you can really purchase a second property for that purpose with as little as 5% down. And a lot of people have the misconception that you need 20% for your second home. And really, there's programs that allow you to purchase with as little as 5% down in those cases.
Yeah, I had 2 conversations in the last 2 days about exactly that they own properties already, but they wanted to buy a cottage or do something like that. So that program definitely has gets some good usage, especially in Northern Alberta, it seems, right? So you and I both are big fans of what we're going to talk about next. The HOAP, the HOPE program through Sagen, is passion project for both of us, I guess, right? I talk about it a lot because I had clients that have had needed it in the past, whether it was the fires in Fort McMurray or the flood somewhere. It seems that there's always a need to assist our clients. When the fires were happening in Fort McMurray and people were calling, I usually was praying that it was Genworth in those days or Sagen that we could at least have some source of maybe aiding them as they get through all of what they were going through. So, and I believe you went off and did just that for quite a while and worked directly with the HOPE program.
I did. You're absolutely right. So our HOPE program, our Homeownership Assistance Program, so our acronym HOAP, it is a program that I've been very passionate about. Like with you, Len, we're both great cheerleaders for this program and talk about it every chance we can. So this program is designed to help people that experience true financial hardship. So like you said, whether it be the fires in Fort McMurray, so natural disaster, if it is job loss, which we experience or see a lot of, or reduction in hours or pay that can affect somebody's financial situation. Maybe there's accident or illness or perhaps even death that will affect somebody's ability to pay. Maybe there's marital breakdown and there was 2 people on that application at the beginning of that home, and one leaves and one is left to carry that. And that can be a financial strain as well. So our program is designed to help any of those people, and in many different ways, whether it be defer mortgage payments, tack those mortgage payments back onto the end of the mortgage term. Perhaps it's a partial payment. Perhaps it's a amortization increase. We actually have the ability to take that mortgage that initially was at 25 years and take it all the way up to 40 years on the back end if we need to. And when it's for financial hardship reasons, we don't charge an extra premium to do that. We take financial assessment of the homeowners and figure out what they can afford and stretch that amortization so that they can make their mortgage payments and keep their home. We can also do promissory note. So that's really a promise to pay. We do a loan between the homeowner and us at Sagen at 0% interest rate. So we don't charge them anything for this loan between us. And it's really to maybe help weather that time of maybe there's many payments that are behind and we can lump them all together and do a promissory note. Maybe there was a shortfall. They had to sell their home and there was more owed on that home than the market was able to sell that home for. And so there's a loss or a shortfall there. And we can do a loan between the homeowner and us to pay that out over time. It's a far better solution than foreclosure and having, a judgment on that person. So that will affect them for the rest of their home borrowing time, I guess. So the solutions are wonderful. There's so many stories and situations people can get affected by financial hardship in many different ways at different times in their lives. And so it is a wonderful program. Again, we don't charge anything extra to utilize this program, so that I believe that when we charge that premium initially to protect the lender, that default mortgage insurance premium, we are also protecting the borrower at the same time, should there be financial hardship. So, and you're right, I did have the opportunity to work for our department for about 6 months during the peak of COVID. And it was a very busy time for that department of ours. As you can imagine, so many people affected. And it was heartwarming to be able to be on the other end, to take those calls, talking to those homeowners and figuring out a solution that best fits them. So it is a wonderful program for sure.
The benefits are huge. You talked about foreclosure. There's nothing worse than foreclosure on an insured mortgage. With any of your competitors, it's the kiss of death for the rest of your life. It feels like that it's never really forgiven, it seems, right? HOAP program, I didn't know that you didn't charge any interest on some of those. That's pretty impressive. But you're also the only insurer that the client can go directly to talk about the possibilities. Is that right?
Absolutely. Yes, you are right.
Yeah, and that's like I said, when there's a problem and it's not your company, it basically just gets referred back to the lender, and they have one objective, and that's to protect their investment as well, right? So sometimes it goes that directly to foreclosure kind of idea. So all these insurances, they pay for them up front. How portable is the Sagen insurance?
That's a great question. Yeah, we do have we call it a portability feature, really. So if they've got a home initially, they decide they want to maybe upgrade and purchase a new home, they can certainly port their mortgage over to that new property in most cases. And what's wonderful about default mortgage insurance is that you can also port that insurance over to the new property as well. It's great. A mortgage insurance can be ported to a new property for up to a maximum of 6 months after the closing date of that currently insured mortgage property, if that makes sense. We do have also the portability table, I guess, or rules around that is within 6 months, it's 100% of that premium is ported over. Within 12 months, it's 50%, and within 24 months, it's 25%. So the insurance premium is there for the duration of that amortization. The 25 years typically is initially what it is. And so it allows that insurance premium to be ported over to that new property over, in future events, I guess.
Right. So, and I know I had thrown in that other question about it. I know that in the US, it's done as a monthly fee, and just like insurance on your house or car or whatever, right? I don't imagine there's any sign of a change coming in Canada, because it's pretty much regulated by what CMHC does, and they're not changing that or paying the insurance premium up front, right? 30-year amortization coming for new homes.
Yes.
Got a little undercut by CMHC, I saw, for the fee. Do you think they will follow suit?
Absolutely. Yeah. We did put out a lender update just last week as well. And our lender update regarding the 30-year amortization is that we are actually only charging 20 basis points above the standard premium. And so there's just that surcharge for an amortization greater than the 25 years. So we have done the same as well.
Yeah, and lots of talk, and I read about 5 mortgage news feeds every day of that extended amortizations maybe being the savior of the new home industry, I guess, or homes in general. For many years, we go back far enough that there was the 40-year amortization and 0 down payment. And do you hear any talk about it going beyond that 30? 30 seems to be a fairly safe number, I think, for most.
Yeah. I mean, I think it is wonderful that we have that coming as of August 1st, the 30-year amortization for first-time homebuyers for a new build or not previously lived in home, which is wonderful. I do think it is the start. I think the government will see the response from borrowers and see if that helps with affordability for new homeowners. I do hope that there might be, and there is some talk about it maybe being 35 years in the future, but I think it's going to all depend on how well this rollout goes. this is probably just one of the first phases.
So we're obviously going back to our own books and searching the clients who didn't quite qualify, if they're looking at new homes still, or if they haven't bought, that, to be in touch with them to say, well, think about this in August, that the 30-year amortization will make some difference. It's not a huge difference, but it might help them qualify for another $20,000 or $30,000, right? So,
right.
Okay, well, thank you very much this morning, Teresa. This is great that we got a chance to add another insurance talk in this morning. It's a necessary thing for everybody, and I appreciate your time this morning on a Monday morning to get this podcast out.
I appreciate your time too, Len. It's always great to spend time with you and talking about the things that we love most or are most passionate about. So it's great to be here with you today too.
Thanks for listening today. I hope you found the information that we provided to be useful in your mortgage journey. And remember, you can always find our associates at www.brokersforlife.ca/associates. Have a great day.